The future will be built by AI and valued in Bitcoin, and you will be stuck in the middle if you don't start paying attention today. In this episode of Bitcoin for Millennials, I talk with Jordi Visser, a Wall Street veteran who managed billions before betting big on Bitcoin as the purest AI trade and the cornerstone of our financial future. We discuss how AI will disrupt everything we know about business and finance, and how Bitcoin will rise through the chaos, and what it means for raising the next generation. A disruptive future is coming at an ever-accelerating pace. So stay with us as Jordi's insights will change how you think about what's coming next. All right, let's dive in. All right, Jordi Visser, welcome to Bitcoin for Millennials.
Good to be here, Bram.
Yeah, happy you're here. I just told you I've been studying Bitcoin for like 10 plus years, but you're probably the number one person that I've been watching, I'd say for the past 6 to 12 months. I think your entire thesis about, the convergence of AI and Bitcoin is increasingly relevant and very profound, I would say. It has helped me a lot to paint a picture of the future. So I think you've developed one of the most compelling frameworks I've seen about the future. Can you kind of take my listeners through what you think are the fundamental pillars of this thesis and why you say Bitcoin is the purest AI trade?
I grew up in the markets beginning at Morgan Stanley and immediately became most interested as a trader during my younger days in my 20s, trading emerging markets with macroeconomics. And to trade emerging markets, particularly during the 90s, which had a lot of chaos involved, you needed to focus a lot on macroeconomics for leading economic indicators to figure points where all of a sudden there'd be a bust. And so I got very familiar trading in markets that I think are somewhat similar to Bitcoin just to start out with. So I've always been comfortable with things that can fall 90% and then rally back to new all-time highs. But my macroeconomic background took me into eventually leaving Morgan Stanley, starting my own hedge fund, moving that into another hedge fund, managing a macro portfolio there, and then moving on more to be the chief investment officer. And when I made that switch, I had to think more about the entire portfolio as opposed to just mine. And that became bringing me back to a world where I was focused more on the global situation. And I had to do a lot more studying of why all of a sudden it was evident to me that, number one, Europe, China, Japan, and the US were all embarking on the exact same thing, which is a problem with population growth. And somehow or another, post the great financial crisis, companies like Amazon and Google, and less so Microsoft and Apple, but let's just say even before NVIDIA, the majority of the Mag 7 were starting to see their businesses ramp up, and they were taking an enormous amount of market share from around the globe. And most importantly, they didn't need debt. And this broke all the rules that I understood about growth for companies. And I would take companies and relate it back to the economy. So I took a trip out to Silicon Valley and stopped focusing on my macro kind of normal thing of commodities in China and what was happening around the world. And I went to Silicon Valley and everything blew my mind. And so I started to study what it meant that I heard in Silicon Valley, which was this change that was happening with innovation that was accelerating. And the reason that those magnificent sevens were taking so much market share from every other business and they didn't need debt was what the future held. And I got a glimpse into what the future was. And the future was machine learning, which was also happening at the time. The future involved labor being disrupted. So it wasn't just retail stocks that were getting hurt by Amazon. It was the disruption of labor. And all of that started to make sense to me. And then in 2020, when the government was forced to print an enormous amount of money for COVID to avoid a recession, it became evident to me when you connected all the dots that what Bitcoin represented was actually the anger that people had from the government related to not only losing trust in the banks back in 2008 and 2009, but recognizing that the government had the ability of just printing money whenever it wanted to prevent a recession from happening, but that wasn't actually fixing the problems. And so I knew from the amount of money that was printed that we were going to have inflation. I think everyone on the macro side could see you can't put that much money in the system. But that's when Bitcoin to me became the central feature of just the end game, which is the personal computer started the disruption in early 80s. The internet carried on the disruption in the early 1990s. Then the smartphone and the cloud continued the disruption from 2007 till now. And machine learning and artificial intelligence and everything that is associated with it is really the final straw, because we got rid of debt to disrupt the relationship between debt and GDP. And now we're doing the ultimate disconnect, which is labor from GDP. So in the coming years, we will see GDP stay relatively strong, and we will see the labor market, as we're seeing now, not show strength, because we started with not needing debt, and now we don't need people to grow a company. And the problem is that means we have a concentrated situation where there's very few winners and a lot of losers. And I just posted something in Substack on this today. And that's the issue. So I believe that Bitcoin represents the rebirth of a new system that's coming, that AI is basically cannibalizing capitalism as we go along, destroying not just the debt side, but also the labor side. And it's just making people angrier and angrier around the globe, because there's very few people benefiting and most people are losing.
Yeah, and this is why I find it's so interesting that you talk about this. It's kind of like, I'd say 3, 4, maybe even 5 things like converging almost at the same time, right? I think there's even people that say like the launch of Bitcoin in 2009 coincided with the liquidity cycle. So it is timed in a certain way, whether on purpose or not. I think eventually is kind of irrelevant. But in 2025, you see these things at least happening in parallel, slowly converging, or perhaps you think it's faster, right? I also saw you wrote that one of the pillars is obviously the debt-fueled monetary system, right? And so I saw you write that that we're witnessing an unprecedented fiscal and monetary intervention, which marked the final climax of the global government debt supercycle. This sounds like something that is ending. Why is this different now than previous financial crises before? I mean, people have been talking about the US debt for decades. Why is this time, in this case, then really different?
Well, when you say really different, remember, until 1971, the world was on a gold standard. It's only when we decided to try this experiment of having the global reserve currency not be backed by gold. And I'm not sure a lot of people have thought long and hard about this. I know there's a lot of Bitcoin people that have thought about it. There's a lot of gold bugs that have thought about it. But for most people, they don't think about the history of money, where it came from, and realize that there's been many, many versions of this. Systems come and systems fail. Central banking comes, it fails. We get all this drama that, oh my God, the Fed's losing independence. This is going to mean the end of the world. When the reality is these systems are made to be broken. They don't last forever. And so when we attempted to go off the gold standard, emerging markets had problems in the 1980s. They had to create Brady bonds to basically allow those countries to kind of survive. The 1990s, we had the emerging market crisis, which really ended with the Asian crisis and China and Hong Kong needing bailouts. And I was in Brazil at the time. Then we got into the financial crisis in the globe with the great financial crisis. Then we went through COVID. We went through Silicon Valley Bank. And what we've learned along the way is that the government always stopped the recessions from turning into a depression. It was only when they got the tools of the great financial crisis that they realized that they had to do this in much bigger way. And what people don't realize is everyone has heard, well, there's not enough money for Social Security past a certain time. Well, those are promises made into the future. And the debt has been to enable kind of that game, that Fiat Ponzi scheme to continue. But one of the big fears, both in the great financial crisis and also partly during COVID, was the fear of pension funds. I mean, there's a lot of companies like GE and General Motors and Ford, the companies of the true industrial revolution where many, many people worked, where they have pension funds, where if those companies went under, there was risk on the liabilities from the pension side. So the reason we're at the end now, and it really is the end, is because the math doesn't work anymore. There isn't a solution that involves, okay, we'll just keep doing this forever and ever. The numbers get so big that you either have inflation, you end up with a distribution of wealth problem, which to me is the solution that we're coming to. Innovation is offsetting what would be hyperinflation for all the money we're printing. And instead, we've got this deflationary pressure from innovation, which is creating the inflation in the inverse through a distribution of wealth problems. So you have asset inflation on one side, and then you have very few people owning the asset inflation on the other side. And so that is why the majority of people are suffering right now, and why this is coming to an end one way or the other. And remember, for everyone who's a Bitcoin follower on here, the governments of the world were the last people I would think would be supportive of Bitcoin, but this is where we are now. And the reason is because the voters, the people in the United States of America that are losing out on what's happened, on what I just described, voted for the president who was supportive of Bitcoin. That has always been the end game, is that democracy voted for Bitcoin in the last election.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all time. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you. My American friends, I've got something for you. If you're into Bitcoin, you want to grow your stack in any way possible. What if you could do it effortlessly just by spending your fiat? The Gemini Bitcoin credit card is designed to help you do just that by giving you instant Bitcoin rewards on every purchase. Just use it like any other credit card and earn back up to 4% on transportation, 3% on dining, 2% on groceries, and 1% on everything else. There are no annual fees for this card and no exchange fees to receive your Bitcoin rewards. Sign up to get your limited edition Bitcoin Orange credit card and earn a $200 Bitcoin bonus when you spend $3,000 in the first 90 days. You can find more information and terms in the description below, or go to gemini.com/Bram to sign up today and start stacking effortlessly. That's gemini.com/Bram. So the pattern recognition is less about this time is different, but it's just the same as before, basically. That, like, the math is still not mathing in that sense.
Yeah, it's just different innovations, and I think people should remember that. The one thing that's the case is life expectancy continues to go higher. The reason life expectancy goes higher is because of innovation. Innovation has reached a point where if you're, for the first time ever, you're able to replace human intelligence, it's kind of the end game of this whole fiat system.
You argue that AI will systematically destroy most traditional businesses and assets, right? As you said, like, this technology is replacing the human productivity. But at the same time, you say Bitcoin will thrive. So how can people look at this apparent contradiction? Like, how does destruction in one place eventually lead to the ascension of Bitcoin? At the same time.
Well, you know, this is a part of kind of my belief system where if people don't have to work, why would you want to work? So people at some point have to sit down and ask this question to themselves. If everything were free, if you could go anywhere you wanted in the world for free, if you could have anything you wanted at your fingertips, then why would you want to work? So when you get into this conversation of what capitalism or working has been since it started, and remember, you got to go back to really the invention of the plow that allowed people to feed others with less people. Meaning before, it was kind of community based. You you made enough food, you shared with the people that were around you. But then all of a sudden the plow comes, and now your kids can go, oh, I'm going to go be lawyers in the city. I'm going to move to the city. We're going to go all go. This whole concept of kind of what work was has evolved. I believe that whether it takes 50 years, whether it takes 30 years or 100 years, eventually machines will be making machines, which means there will be nothing left for humans to do.
Yeah.
The hardest time for that is at the very beginning with the shift, because, you know, my name is, as you know, is Visser, and you know what it stands for, what it means. So it's fisherman, which means my name was named after my family, which were fishermen in a tiny island in the Netherlands. So again, our names have always represented kind of the jobs that we did. And I think that's ending. And that's a very hard thing for human beings to accept. But where Bitcoin survives is that the exchange of things, the money part, whatever it is, for the next 35 years, we will need to have some form of exchange that goes on, because we're not going to be living in a world of abundance in the next 30 years. And so until that time comes, I don't believe that the fiat assets are going to be doing the job. I think everything is going to go digital. And as everything goes digital, we need digital currencies. And even though Bitcoin is not necessarily the currency that will be transacted, it is definitely the store of value, which has no competition. Google has competition. Apple has competition. Bitcoin has no competition.
Yeah, so basically Bitcoin is a tool to protect yourself from this basically coming creative destruction. We are going through like this creative destruction. We are basically going back to a place where there is abundance in that sense.
Yep.
Is that correct?
Yeah, and I think, you know, I probably haven't talked about this on other shows, but you've triggered, you know, my thought on this, which is there was a book written by Noah Yuval Harari called Sapiens, and I've referenced it in a few of my papers, where human beings, because of the brain that we have that separates us from animals, the ability to communicate with each other and reason with each other and think, we create stories to make us happy. But they're stories. They're not reality. It keeps us from killing each other in many ways, which is different than packs of animals. And he goes through this, and money's a story. There's nothing real about it. It's just something you believe. This paper you have is something that you believe is worth something, when the government just prints it whenever it wants. So it can't possibly have the value that you think. And that's what debasement is, and that's what goes on. Yeah. But if you take it further and you go back to my job situation, jobs are a story that's been created. If we don't have them, it's like telling a kid there's no Santa Claus. It's a shock, and you don't know what to do. The reason I say to people that Bitcoin is real is because people believe it. The same way they believe in Santa Claus. It's something that they believe in. And as you get older, you don't. So Bitcoin to me is a belief. Gold is a belief. Gold is carried on for thousands of years. Religion is a belief. It's faith. It's something a story that people believe in, that they do to be happy. And Bitcoin to me has already passed that test, based on its size, based on the growth in the users, and how much people doubt it who have money, because they shouldn't believe in it, because it should threaten them. The same way AI threatens human beings' jobs. So you want to find things to believe in. And I think Bitcoin represents one of those few moats of a belief that will not be broken, at least in the near term. But my guess is it'll last longer than we all recognize, the same way gold has for now, and the same way religion has.
Yeah. Maybe good to emphasize, I assume when you say belief, it is belief based on understanding of its characteristics, right? It's not a random belief in something, or at least that's what I would argue. But I think if some people hear that, right, they say like, oh, you believe this is a thing, right? Like, I think the critics, or the people that eventually are less optimistic about the future than we are, I would say, because we see something in Bitcoin would use that as an anti-Bitcoin argument. And maybe that's a nice bridge to something I try to do that you recommended, right? Because you proposed to use, you use a lot of AI, right, and tools like in your work. And so I heard you propose to using Perplexity for financial research, right? That is like replacing the Bloomberg terminal. So I recently asked it to analyze which single financial asset would be best for millennials preparing for this AI future that you talk about. And surprisingly, the answer was the S&P 500, and it was citing proven returns and AI company exposure. Yet, of course, we're talking here arguing that Bitcoin is superior to this inflated S&P 500. So maybe as a fun intermezzo, I just wanted to ask you, like, what do you think about AI itself recommending all these traditional assets over Bitcoin? Like, shouldn't the AI actually be very logical and rational to, eventually compare those two and end up with Bitcoin?
Not yet. Maybe you asked it the wrong question.
Okay.
So, diversification is important. So if you start with one asset, I would say to a young person, the S&P 500. I wouldn't say put all your money into Bitcoin. I would say put all your money for now into the S&P 500. It's 500 companies. It has a track record. It's more diversified. Its Sharpe ratio hasn't been as good over the last, any time period really, except for random periods. But on a vol adjusted or, taking a lower volatility asset, it should be a higher weighting in your portfolio. So if you're going to pick one, I think it would be very risky to have all your money in Bitcoin and not be able to handle a 40% drawdown. So I think it gave the right answer based on some analysis. If you asked it, should Bitcoin be a part of every portfolio? My guess is the answer would be yes. And that would be a different question and a different way to frame it. So, if you had one asset to bet on for the next 10 years and your goal was the highest performance, Bitcoin might be there if you said only pick assets that are greater than $1 trillion. So I think it depends on the question you ask me.
Okay. Well, this is why you're the pro and I'm here asking the questions. Something you just mentioned, and I also heard you talk about is, structural deflation that comes from exponential technologies and exponential innovation is something that is a big part of your framework, which I heard you talk about comes, of course, from Jeff Booth, who talks about that a lot. How do you kind of argue this, right? So I usually argue that it is logical that everything eventually becomes cheaper and more available to people. Like this is usually the first thing I ask people when I talk about Bitcoin and money and the future, right? Like, do you agree that stuff eventually becomes cheaper, more accessible? Yes. Okay. So then why are some things currently more expensive than they were 10, 20, 30, even 50 years ago, right? And I then argue, this is because the money is losing value. You need more units of a dollar, for example, to value this progression in basically. How does that connect to Bitcoin for you? Like, how does this deflation actually support Bitcoin's value proposition rather than undermining it?
Well, again, Bitcoin is an asset. So it's not something that people put their money in, anyone, because they want to go transact. So you're putting into it because you think it's going to be worth more in the future. Well, there's $700 trillion of assets that are in the fiat system. The fiat system is completely based on scarcity. So again, when the money just keeps growing and the leverage keeps growing, then people have these assets. And these assets keep going up in value because it's part of the Ponzi scheme. The reality is, as I think everyone knows or should know, there's 700 trillion approximately dollars worth of assets in the world when you add them all up. If everyone tried to sell the assets at the same time, they're worth zero. There isn't enough money underlying those assets. I think the money supply around the globe is maybe, $30 trillion of actual hard physical money supporting $700 trillion. That's a leverage of 20 to 1, 25 to 1. And that's what a Ponzi scheme is. As long as nobody sells everything, then it stays up there. Well, the great financial crisis, everyone started selling things because there's debt out there. And if I need to get my money back from you and no one wants to actually hold the assets anymore as collateral, you get this unwinding of the assets and it turns into a self-fulfilling prophecy, and the governments need to come in and prop it up. And that's been the fiat system for the entire bit of time. So inflation is, and goods go up in value based on the scarcity involved with it. But most of them have underperformed both CPI. Very few things have actually outperformed CPI. And in the most recent years, even very few assets have outperformed it. Where Bitcoin fits in is the people in the fiat system are gradually going, I would rather have my money in this other system, which I think has scarcity, where I'm not going to have to worry that the governments are printing money. I don't believe in this system. And it started a little bit from anarchy. It started in 2008. I think the early people were a combination of the greediest people in the world that saw the opportunity very quickly, and then people that around the globe saw this as a way to hide money. For whatever reason. And it's not just criminals or people moving money, but I think it's people in emerging markets that I grew up in that just were hiding their money from their government because they were worried about confiscation and things like this. And this was a safer way. Well, over time, as more and more people got involved, and this gets back into the comment I made about belief, all assets and everything in life that you're holding are beliefs. Innovations are ideas. Ideas come and go. Beliefs stay for a long time. They're more durable. And so for people that are investing in Bitcoin every day, whether it's now corporations, governments, there's a lot more people that are investing in it. That means the belief system is growing more and more, and that's what you want to see. So I think there's less trust in this other world, more trust in the new world, and what Jeff talked about, and which the part that I grabbed onto, which I had spoken about for years as well in terms of exponential innovation. But what he said that was really interesting is that the government's job is to create inflation. It's to offset the deflation that comes from innovation. And that push and pull between the two is what creates the friction that involves, meaning as deflation happens, as Ford and GM are destroyed by Tesla, which is a form of deflation. It's not in the way you're thinking about it, but it's a form of deflation. Their equity collapses. That's deflation. They never bounce back. So the debt stays the same. Their assets go down in value. And so as that happens more and more through the innovation breakdown, it just means more and more people are looking for something that won't happen to in their portfolio, and gradually more and more it's going into Bitcoin.
So would you say that is the battle of a government, actually, because there are certain policies, goals, or whatever they communicate, and if they just let it run within this monetary system, then too much would go bust or something too quickly? Is that what you're saying? And that is not popular, obviously, right? So is that what you're saying?
Yeah, the fiat system is credit backed.
Yeah,
plain and simple. So you use debt to create the inflation. If you let the debt go bust, then you have the Great Depression.
Yeah.
So the governments never want that again. Once you go through the Great Depression, and remember, the difference about the Great Depression and the stuff that you would hear before that is that we became global during the Great Depression. We didn't have the ability of traveling around the world. Once you can get on a plane and get someplace in a short amount of time, you're increasing things like COVID. If people didn't get on planes and travel around the world, disease wouldn't spread as fast. So globalization, which again happened through innovation, makes the borders less important. And so when Lehman Brothers happened and I was at the hedge fund, I had been betting all year that this was going to happen. That there was no way that the rest of the world could be isolated from what was happening in the U.S. banking system. It would eventually spiral in some way because everything's interconnected, because the debt of the U.S. is eventually connected to the debt of Europe and the debt there. It didn't matter if it was a hedge fund that it caused it, or whether it was banks that caused it, or whether it was transportation companies and the way they were financing. Everything is interconnected. So the point being is, if the governments allow that deflation to set in, the good news is they're getting a reset. That's what the Great Depression was. It reset everything. The bad news is it took decades to get out of it. There was a world war before we got out of it. And so they don't want to go through that again. And that was the reason why they're doing everything in their power to ensure that we never have a recession again, because at some point the debt is so big to where the government debt is now 120% of GDP. And it's not just the US, it's around the globe. It's in Europe, it's in Japan, which is above 200%. It's in China, which is probably close to that as well. We just don't count their private sector debt because we don't know what the number is. So the reality is, Bram, when you're in a fiat system, you're using the ability of printing money. You're using this debt-based model, but you have to have the assets stay up, because if the assets fall, then the debt becomes an issue.
Yeah. If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want. Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read. And it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order. It's interesting how this is so in plain sight, basically. I talk a lot about things being nominally or nominal, right? Like they just print, they paper it over, and then in some funny way, I think belief is a good word, everyone is like, yeah, okay, we're good for X amount of time, and then it kind of like happens again. But it is a very structural, systematic flaw, I would say, or maybe it's a systematic feature. However you
human beings, have you ever eaten McDonald's?
Yes, unfortunately.
Okay, and you know it's bad for you, but you still ate it. I won't put you on the spot, but have you seen people do drugs? Have you seen people smoke cigarettes? Have you seen people get drunk? Have you seen?
Yeah, good point.
Human beings will always do what they know they shouldn't be doing, and so things are always in plain sight with people, but they want to live life.
I would agree, but in this context, it is kind of like being delusional to a degree, right? If you're just following that belief without any structural underpinning, then maybe that's the fiat money game. You just have to be close to the money printer to actually.
If someone gave you McDonald's and you knew you would die the second you took a bite, would you take a bite? Okay.
No.
So the problem is with everyone, they vote for the debt. They vote for the bubbles. The democracy is we want more printing. So everyone can say they don't want the printing, but you're in Europe. I remember in 2012 when basically Mario Draghi drew the line in the sand and said, we will do whatever it takes. Well, the only way he could say we would do whatever it takes is if the Germans agreed to bail out Portugal, Italy, Greece, Spain. I didn't think that was a likely scenario, but it had to happen because regardless of the way that you think of saving versus spending, and obviously those countries spend differently than Germany does, I don't care where it is at the end, when you're going to be part of a society and you have a long-term goal and you've already got a debt-based world, the problem is the voters of the world, which the politicians are subject to, if you cause a depression, you will be voted out as a politician. End of story. So that is the same thing as if you knew you were going to eat a McDonald's burger and die 2 seconds later, you would never have a McDonald's burger. And that's what every politician knows, is if they vote for depression or they cause one, they will be out of office.
Yeah. Okay. Very good point. Point taken. So a bit a step back or forward to when we talked about AI, right? So you mentioned, if eventually AI kind of systematically destroys everything, right? We see this creative destruction, and in the 2030s, as you said, there will be a graveyard for the Fortune 500.
Yep.
What does the economic landscape look after that? Also, when no one really has to work, as you say, which businesses or what type of people will thrive in this era? I mean, eventually with AI, even today, right, we can make a screenshot of Airbnb and say to Replit or whatever coding agent, build me an Airbnb. Then obviously you don't have the distribution, the mode they have, etc. But just any idea conceptually can be copied or reverse engineered the moment it comes out or anyone presents it to the world, right? So there's this infinite scaling and copying. Yeah, what does that look like? Where does the economic activity come from? Is that then rapid abundance, perhaps, because we can just copy infinitely, or how can people think about that?
Well, here's the first thing. So I'm a big riddle with inside a riddle person. And so I think my beliefs on what will happen to the Fortune 500 companies, it's a statement on two levels. Number one, it's a bearish dollar statement from a macro perspective, and I'll get into the reasons why. But the second thing is the Fortune 500 companies means I believe big companies are going to be at risk. It doesn't mean I don't think there'll be any companies. It means I think all big companies cannot survive. And the reason is it falls into the same thing with the dollar. So let me go back and explain to people my logic behind why the dollar and this whole American exceptionalism story has been overblown. The dollar has rallied significantly around the rest of the world, and every economist and every person who I have very little respect for as being intelligent on these fronts gives you the reasons why. They give you all these things they've learned in textbooks and everything else. But in all those textbooks, there was no internet. In all those textbooks, there was no Silicon Valley. In all those textbooks, there was not this one little tiny place in Northern California, which basically created the internet and ended up sucking in every investment dollar for basically the next 40 years, 35 years. You could not survive as a pension fund CIO. You could not survive as a sovereign fund CIO. You could not survive as a hedge fund manager. You couldn't survive anything unless you invested in the Silicon Valley companies. That has nothing to do necessarily with America. That doesn't have to do with American exceptionalism. If it did, most of the people running the companies would not be from other countries, but they are. So this is not just a U.S. story. I think the United States creates an environment where this kind of creativity is conducive to people coming to, and I think that was American exceptionalism. But what has changed now is that moat that the United States had was on coding. You had to come and take classes at Stanford to learn how to code to be able to build those companies and build startups. What is going to happen over the course of the next decade, which will disrupt the Fortune 500 companies, is that anyone can code now that can speak any language. It doesn't even have to be English. You speak into your phone and say, build me an app in whatever language you have, and it immediately converts that into the code necessary to build an app. So the competition just was democratized, and that means the dollar will weaken over time. Not because of anything the United States has done, not because of Donald Trump, not because of any of the policies that have gone on, because there's the democracy. There'll be other people that come in. This is about the competition that'll come. And the people that are the companies that are going to lose the most are the bigger companies, because they have the worst thing you can have with AI is people.
A lot of people. Yeah.
Exactly. And startups and entrepreneurs can build businesses without any people. I have my own business. I have no employees except for myself. I like running it that way. I'm incredibly happy. I don't have to manage people. I don't have to give them a bonus at the end of the year. I don't have to listen to their whining. I've done that since in my 20s. Now what I'm used to is talking to AI and getting something that'll work all the time. And I'm not joking when I say this, Bram. Before we got on here, I was having ChatGPT run a deep research report for me on a theme that I have with Inside the Macro World that I think is worth a lot of money. I will be sharing it on my video, and I will be selling it to people who want to get ideas on why oil prices and gas prices are going to be the last thing to run up as part of this AI demand and how this is different than history. I can do that now with the code that comes from AI, and that means I can compete with every Morgan Stanley person, every Goldman Sachs person, and you couldn't do that a decade ago. So that's why I think the Fortune 500 companies will gradually come under attack, and that's why when Michael Saylor talks about Bitcoin as being part of the new capital structure, people need to think about there will be a lot of small businesses that will never go public. The public markets will change. They will be replaced with tokenization. Everything will be on the chain, and everything will be involving crypto. And that means that we're transitioning from a world where there were public companies that dominated to smaller entrepreneurial businesses.
Yeah. Sidestep, I think I love what you said also about what I've seen with using AI. You also don't have to be an expert in a certain subject. It's about a way of thinking. I've actually helped helium mining company that I didn't even know helium was mined to reduce 10,000 square kilometers of a possible concession they have to about 900 square kilometers where they could do the prospecting. So they had 10,000 square kilometers where they had to do the prospecting, and they were like, okay, these are our like thresholds, blah, blah. They gave me data, and I just started working with Perplexity, and eventually I ended up with 900 square kilometers. I drew, the geo map on Google Maps, and I made a little report. I sent it to them, and I said, "Does this make sense?" And they were like, "What the fuck?" And I was like, "Whoa, yeah, that's very interesting that you can actually do that." And I love that. In this way, I kind of look at the internet was the democratization of information around the world, and AI is the democratization of the application of the information, right, of the productivity. So you have a competitor in wherever who can actually access AI and think in a certain in a certain way, and that for me is the very disruptive part. And I like what you said about Bitcoin in that sense. Like, you need some sort of economic anchor or financial anchor if you can be disrupted every day, basically. Yep. So whatever value you create today, you want to store today, and then tomorrow is a new day eventually, right? And you get back into this, new decentralized productivity ideas market that is instantly global, right? And that, I think, is something that not a lot of people see yet. I think it's also hard to see, but that is kind of where I think it's going, and especially with the tokenization part, as you mentioned. And I wonder what you think. If company stocks can be traded 24/7, 365 globally, instantly, if you go to sleep and you have some sort of office on the other side of the world and someone does something super stupid, and there's this blob of people that see it online and are like, okay, this company is done, we're going to dump it. You wake up in the morning in America, like how is that going to work? Do you have like an idea around that? Like, how can companies stay competitive when there could be 24/7, 365 stock trading, plus this AI infinite copyable productivity going on? Like, how is this just all going to unbundle in a sense, like you say, like just smaller companies, solopreneurs, or just small groups? Is that what you're seeing?
Yeah, I mean, I've said I think eventually, 10 years from now, if you fast forward what I said about public companies being gone, if everybody's an entrepreneur and every day their business shuts and there's a new business, meaning, it's literally, I remember someone asked me, I can't even visualize what you're saying. I'm like, do you have a son who's 15 yet? And if they say yes, I go, okay, go watch them play video games. just watch them sit down and play video games. That's what the future is going to look like. That's what crypto is. That's why young kids were able to embrace crypto very, very quickly. They were able to embrace it because they were already playing games of tokenization and things that would be gone a week later because there was competition. Oh, there's a new game. Let's go over there. That is the world we're in. It's this attention deficit disorder that all kids seem to be able to thrive in. And so in a world with more entrepreneurs where AI is going so fast, you come up with an idea today, it's fantastic, but then it's gone. Before we got on here, I was talking to someone and they asked me if I was paying attention to the potential US government shutdown. And I laughed and I said, are you kidding me? First of all, I don't watch the news. The news is here today and it's gone tomorrow. And there's a new front headline breaking story that the world is going to end. There's always something, because to your point, we're in this age of information. We're in this age of social media. It's moving so fast that it's hard to keep up with. So everything that you mentioned, I think will transform the way people think about investing. Older people who, my age, who have thought about how long it takes to accrue wealth in investing in the S&P 500. I don't meet a young person that believes they should ever invest in the S&P 500. Like, I'll never get wealthy investing in that. It doesn't move. The reason they think that way is twofold. Number one, very few people in jobs at that age have any hope that their jobs will still be there in 5 years. They move much quicker. It's all about mobility. They don't have this same mindset that people did. Everything is moving faster. Your job, where you live, everything just moves faster and faster and faster. And that is a function of the technology world that we live in. And I think it's only going to accelerate. So that's what I think will end up happening, is the way we think about things will just evolve over time.
Yeah, this perfectly ties into something that I also wanted to ask you. You just mentioned like a prediction market, right? I mean, you're a bigger advocate for crypto than me. Like the only thing that I've seen out of crypto that I think works, which is not Bitcoin, is Polymarket, actually, right? Like or Kalshi, but Polymarket as an example. That's where freedom of capital connects with freedom of information. And also human capital in a sense, right? And you can put your money where your mouth is, basically, right? And so I think the concept of prediction markets obviously is old, but in 2025, this is like prediction markets 2.0 globally, instant. And I heard Jeff Park, formerly Bitwise, say perhaps prediction markets are the new investing. And it kind of ties into what you just said. If everything goes so fast and I'm on the internet all day trying to get an edge, either in information for my ideas, to apply my ideas with AI, or actually invest in what I think is the biggest probability of something happening, that sounds like something that people would do if they don't have a job. What do you think about that?
Yeah, I mean, again, I first met Jeff a couple weeks ago at a Pomp event, and he's a smart guy, and I agree with kind of the overall statement. I mean, macro people and older people here will say that the economy has become more of a gambling economy, when the reality is, if you break it down and say, no, it's just a predictions market on things that are moving so rapidly. So if the average lifespan of a company in the S&P 500 is now down to, I think it's down to 15 years, maybe 13 years, which means from the time they enter until the time they're gone from the S&P, which basically means bankrupt, it's down to 15 years. And the number used to be much higher. Mm-hmm. I think in Japan, it's still over 100 years, just to give you an idea of kind of the lack of disruption and the innovation that's there. If you did the same thing for companies right now in the AI world and the startups, a company like Cursor, which has seen 500 million plus ARR in a very short period of time. If you ask me if they're going to be able to grow that business bigger and bigger, I don't know. At some point, they might have competition from AI coding gobbling up their business, and they may start to see their revenues decline. And if their revenues start to decline, they never made it into the S&P 500. They were a company that had a valuation. They raised money at a very high valuation. But then, like a lot of IPOs, they actually weren't able to grow any further. And once you have a down raise, it's a problem. And I think we're going to see that a lot. And it fits in with the prediction markets. I think the probability of companies ever going public is very, very low, because to even get to the S&P 500 takes a lot of time now. It takes meeting certain requirements. And I think AI is going to disrupt that whole startup mentality, and you won't see companies actually make it in there. So I think for all of this stuff, again, it all fits in the same theme, which is just binary events that go faster and faster. The faster things go, they become binary events.
I just find that interesting that, again, this is something that's converging. It's happening. People have to think about it. So it is kind of like competition is just becoming more brutal in several different ways, which eventually kind of forces everyone to be more entrepreneurial, right? And that's something that you've also talked about a lot, that entrepreneurship is becoming kind of like the only way to future-proof your career. As someone, I have children, but also for people who are thinking about raising children in this future world that we talk about, how can we kind of prepare kids for jobs that don't really exist? When traditional education lags behind, I'm even thinking, do my children go through traditional education? How can I kind of erase everything I think I knew about education or whatever was told to me, right? Because that's kind of how I think I should think about the future. But yeah, what are your thoughts there? How do we prepare the kids for the future?
Well, the first thing is to not take away their iPhones. And I say that from the basis of people need to understand human beings extremely well, because it's the only thing, in my opinion, that will separate what's left for humans from artificial intelligence. Human beings will want to deal with human beings. They just will. And whether it's through entertainment, like I don't want to watch the World Cup of humanoids. I could care less. How does that, I'm not interested in that. I want to know the stories of the people. When you watch the Olympics or whatever, they go through the story of the people fighting to get to that point and how much hardship they went through and how much work. There's a story behind it. The same thing goes with movies. So what I've told my kids, and I'll focus more on the one that's left in college. Number one, you have to use artificial intelligence. Artificial intelligence gives you access to intelligence in a way that is fast and immediate. I get asked to a lot of dinners. I get asked to a lot of podcasts. I don't like doing that many of them anymore. I think at the beginning I did because it helps to speak a lot about what you're thinking. It helps your brain. So communicating with people is important, and that's the reason why I do conversations with clients. But to go to dinners is a waste of time unless I know who I'm going with, because if I go with 3 people and I don't know them, it's a waste of time. And it's a waste of time because it'll take 3 hours, and if I don't know them, I don't know their intelligence level. And with ChatGPT, I get 160 IQ immediately. And so why would I waste my time with someone who's, no offense to them, but 101, just above average human being in terms of intelligence on one test? I don't know if they're going to be able to give me anything to probe thought to really go down. Now, that being said, the reason it's important for kids to go to college, or at least do something from a community basis, is that understanding humans, psychology, is really important. And I do believe that all humans are interesting because they all have a story. I'm a big Freud fan. I'm a big psychology fan. I've spent a lot of time reading about what makes people tick. It makes it more interesting to me. So I think for kids in general, number one, they have to be allowed to use technology, because understanding how to communicate with massive amounts of people is really important. Understanding how to manipulate a phone and AI is really, really important. Getting comfortable with embracing your ADD and really being able to use an app one day and not use it the next day. Believe it or not, parents, that's important for the future. It may not be important based on what you learn, but the jobs that you guys had are not going to be here. The world moves fast, and our brains are changing over time. And kids' brains are changing faster because they're starting with an iPhone at 0, and that's how they know how to do this sweep, this motion before they're even 1 year old, because they're just sitting there going, wow, this works this way. They figured it out really quickly. It was made for their brain. Steve Jobs is a genius. So let them all be little 1-year-old geniuses.
Yeah, you know what I like when you see a shift in generation is when someone asks us to depict doing a phone call, we do this, and the kids now do this, right?
Yeah.
I love that. I love that example. Okay. So for the people listening, most of them are millennials. But in general, for the people who are listening, who are just waking up to this idea of a future of AI, this Bitcoin AI convergence, what would you say is the most important actions that they can take today? Like, what's the biggest mistake you see people using? I would assume you would say not using AI, but if we skip that one, is there any other thing that you think about that is very important?
Well, it depends on what you're trying to accomplish, Bram. I'm a balance of life person, so as much time as I like to spend in AI and podcasts, and I'll get into the podcast side and YouTubes. I spent a lot of time in nature. I was in Maine for the entire summer. I go skiing for a lot of the winter, and that is to kind of put myself in touch with nature. I'm a big meditation person. I work out a lot. I work out almost every single day. I eat healthy. So if people are trying to create a balance of life, I think those three things are my suggestions to everyone. So let's break them down. One is getting connected to nature, hiking and being outside and really doing that stuff, because the speed with inside the learning part, the speed with inside the job part, the pressure that comes inside the job part is very debilitating. I do the longevity side to make sure that as I get older, I still have the energy and the ability of doing the things that I need to do on both the nature side, the hiking, the skiing, the whatever I do athletically, but then also for my brain to be sharp. I was just drinking green tea. I have a glass of green tea every day. I have a very structured kind of approach to dieting and food. I'm not obsessed with things. I'm not scared of death. I'm just trying to optimize my body. And so when it gets into the learning side, for every millennial out there, if you want to be on top of things and you want to keep learning, you have to be a great filterer. A great filterer in this day and age of just so much information is if you get caught down a rabbit hole on X with a bunch of crap, if you get into a YouTube that sucks and you're 5 minutes into it, get out of it immediately and move on to something else. Your choices are endless. When I grew up, the sources of information were a newspaper that came in the morning, or you had to go somewhere, and there were 6, 7 channels. So you were kind of confined in this world. Now you have infinite information around the clock. And so the downside is you have so many choices that you have to be great at finding people who are smart and then asking the question, or just looking at who they follow. And I am mad at every X person who follows people that they just follow for whatever reason. Only if you're going to be a great thinker, just know that people are going to look at who you're following and make sure you're only following people they should be following, or at least a high probability of it. Filtering is the critical thing. And the same thing goes with YouTubes and podcasts. If you're interested in technology and AI, you should be listening to maybe 5 to 10 different ones that at this point are great, and then find another 5 that you find on your own. Look by themes, all of that type of stuff. But the way to do that, again, make sure you're healthy and make sure you're in touch with nature. It keeps you going to where you can learn more and you come up with a lot more creative thoughts.
I love that. Thanks for that advice. All right, I have 2 questions to wrap it up, because I know you need to go. So we talked about your thesis for the future. We talked about the 2030. So if we look ahead from 2025 and beyond, are there any specific signals or metrics that you think people should watch to understand if your thesis is playing out correctly? And would there be anything that would make you reconsider this framework that we talked about?
AI is a certainty. It's just a question of how long it takes. But as I say to people, I've learned in markets a long time ago, if people are worried about something not happening, or if sentiment is not there, then you just go with it. The reason I think Bitcoin is the single greatest opportunity I've ever seen is because the smartest people in the world doubt it. And there's nothing that I like more than sitting at a table with people that I've known for years who look at me and are like, how do you, and they start arguing about Bitcoin, and I just smile and I go, you understand that you've known me a long time. I've never in my life found a trade that I like so much that all of you hate so much. Normally you're in the same trades I am. I like oil. I like this. I like that.
Yeah.
But for Bitcoin, it doesn't happen. So I'm not worried from the sentiment perspective. And I have spent so much time on artificial intelligence, not just for myself, but when I started doing my weekly YouTube and I started sharing the information, it's watched by thousands of people. A lot of them are the same people that I was just joking about with Bitcoin. And so when I get on the phone with them, they're all also worried about AI, that it's a bubble, that this is happening. So if people were embracing it, if they understood it, if they weren't too fixated on the other side of AI, I'd be worried. But those are not the things that go on. So I have no doubt along the way there will be a lot of corrections. This is a very concentrated situation. I'm honestly probably more worried about the disconnect that's happening between people. I don't know how this job situation, what it's going to mean for the world. We're already having all of these protests across Europe and the US regarding immigration. Immigration is one form of the problem associated with the labor market. The next one is AI. So in the same way that people are worried about what's happening to their countries and how people have come in and taken their jobs and blah, blah, blah. Well, there's a new force coming in to take your job. And that means we're going to have further disruptions going forward. So I worry more not about the investment side of what's going to happen, but more how the countries are going to deal with it and just kind of the dangers. And in New York City, we're about to bring in a socialist mayor. So I'm wondering what that's going to mean. And all of these things are signs that, again, there's a generational and revolution that's happening where people want change. And Bitcoin is the positive side for that. The negative side is we have to go through a lot of people being angry and a lot of people unable to afford living in the places they want to live.
Yeah. Well, you'll have cheap groceries in New York.
We'll see.
I'm kidding. Yeah. What you said about the contrarian thinking, for anyone who hasn't watched my previous episode with Pia Sprenger, also Wall Street vet, we talked about this exact same thing very deeply, right? Like I also shared that. I mean, I'm doing this podcast. I'm talking about Bitcoin all day. There's many people that see what I'm doing in my close vicinity. And it's not like they're calling me every day like, hey, can we sit for an hour? Why are you doing this, right? And I find that fascinating because I think Bitcoin is the most important topic that at least my peers should pay attention to, right? And they're just not doing it. So I would say the being the contrarian thinker is the opportunity that you have, but you have to, kind of try that out to perhaps be shown that that's the way to go, but we'll see. Great advice. All right, I want to ask you my last question because I ask everyone the same question, which is what is a core belief that you will never let go of?
Core belief that I'll never let go of. Well, I'll give you two. One is everyone should have an insatiable desire to succeed. And it's kind of a riddle within inside a riddle. I wrote a paper about that when I ended up getting a job at Morgan Stanley, and the person asked me what I meant by it. The riddle within inside the riddle is succeed is something you have to define yourself. And I bring that up because there's no definition for success. It's how you define it. It can be happiness. It can be whatever. But that leads into the second thing, which is the internal pursuit of happiness is what I do every single day. And so when I go back to the metrics that I had, which were longevity, making sure I'm learning every single day and connecting with nature, the only way that I have found over time to actually achieve finding happiness, which is a very difficult thing to do, is the simplest framework is to get everything out of your life that does not bring you joy, and you will find happiness. And so that is my core belief. It's what I do every day. That's why I said I don't waste time. I only do things that bring me joy. And if it brings me joy, I find myself closer to happiness every day.
Amazing advice and amazing Ender. And I appreciate you taking the time for sitting here for an hour with me. So I'm very grateful for that. So thank you. And hope to stay in touch. Thanks so much.
Same here, Bram. Thanks.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.